Ngowi TV, informed economists and business perspective.
We are mainly talking about three main functions, and it's important to make this distinction, because going into the future you'll have one of those three functions being performed by something, and that will mean it's banking. You don't need to have all three together in a brick and mortar space somewhere for it to be banking. So we're broadly talking about the extension of credit. We're talking about maintaining safekeeping of deposits or savings, and third is facilitation of payments, and all of the intermingling of these activities facilitating economic activity. Whilst on the other side, when we're looking at the fourth industrial revolution in terms of Internet of Things, artificial intelligence, cryptocurrencies, big data, cloud computing, and a host of other technological advancements. Now, when these things sort of come together is the situation that we're trying to discuss now. In the defense of banking, I think banking has been has been adapting technologies since its Middle Ages origin. I mean, we were once using some coins or Knights Templars in tunnels in Europe to deliver money. Right now you've got SWIFT and things. So banks and the banking sector in general over time has been adopting technology. And I think it's been adopting the technology as it comes. I think the profound change over the last 60 or 70 years is the speed at which the changes in technologies have been happening. Starting with the microprocessors and microcomputers, IBM, mid 1950s, 1960s. Then you go to the internet ages of 1990s and onwards. So now it's a sector, a banking sector that likes to use technology to lower costs, to reach out to more people. But the speed at which these changes are coming is so profound, and it's becoming harder and harder to keep an identity. Or should we keep the identity? Should we not lose the identity? So that is one point that I wanted to make. The banks do embrace technology. It's becoming tougher and tougher as more and more technology is coming at the banks. So there's definitely a need to really sort of take a very innovative and careful approach to see what fits the bill. Also, another thing is the way in which banks have adopted technology. I've seen you have a mix of what you call iterations, minor changes, fringe changes to processes. Banks will be very quick. We'll update an ATM from withdrawal to deposit, and it will be a big bang on the news that there's new innovation. Now we have a deposit ATM. But then there are also more profound changes, like the advancement of the ATM itself in the 70s, or M-Pesa. So there are two different types of changes and technologies that we see being adopted. There is the fringe, iterative, minor additions, which sometimes are disguised as profound, exponential technological changes, and they are the real game changers that are to come. I feel we've had very few of the big game changers. Obviously, the M-Pesas and the likes, that is definitely one of them. I'll give you an example of just from how profound and why that is profound, as an example of being a profound change. There is a bank that in 122 years of its history had only amassed around 2 million customers. But by its 124th year, had 8 million customers. So there was an increase of 6 million customers within its last 2 years because of a certain technology. That is a profound change in its model in terms of what technology it has embraced. So there's almost two lines of thinking. So we need to separate the fringe changes and the more profound. And I think when we're talking about fourth industrial revolution, we're talking about how we can use these technologies to make these profound changes that achieve such scale of changes. I guess then in terms of putting more of a challenge back to banking is in terms of, as we're adopting to changes, the more profound changes as well at some point need to culminate into lower costs of intermediation. Right now, if you still need to send a TT to the US, you'd probably pay $50 to $150 charge on that TT, which is quite exorbitant. as opposed to maybe when you have these cryptocurrencies that may be a very, very small fee to be paid. And so is the cost of intermediation going down? Is the cost of accessing a bank going down? And these are the things you'd expect from such an industrial revolution in technologies.
Nowadays, banking is not where you go, it's what you do. And actually, for my personal experience, I don't go to queue to banks right now. I have Tigo Pesa, I have M-Pesa, I have Uber, as you say. And what we're expecting is, as these banks should go with the innovations, should be innovative. They should see there are technologies that are coming very quickly. The technology is growing very quickly. In fact, they should go with the technology. And sometimes they should, not only, as you say, they should not only open branches, they should also go and educate people on how to use the technology on banking, and they should use technology more for banking. Also, as in the population right now, the ones that are very many in the community are the youth, and the youth are the ones that are using more technology. I can say they use a lot of youth right now. They have smartphones in the universities, in the workplaces. They use a lot of smartphones. They use a lot of internet. So when they attract people like that, then they will have more people. They may have more clients, and also those people will help to grow the technology. Thank you.
Can you imagine that a first century technology of having ink dry on a piece of paper as a signature still exists today as one of the main ways you have to use to open your bank account? I mean, we're in the 21st century, but you still have to sign, or you put. Clearly, there's the technology to move away from that. But you know, the laws, there are other things that need to happen when we sort of push those envelopes. So quite thought-provoking, and thank you for sharing. Before I go to Prof, I don't know if you wanted to add anything?
Not really. A little bit about youth and banking. And I had this discussion with bankers, and there was really heated debate because they're saying, yes, even when it comes to technology, they need to employ more youth. But that's the challenge that we are having, and these were guys from across Africa. Youth found themselves a little bit uncomfortable to be bankers. You know, to dress like you, to dress like professor and all this. They say they recruit good young boys, but then they're more comfortable in their jeans and t-shirt, more or less like me. And I was the only one who was not a banker. Everybody else had their suits. So I said, oh, I like you know. But then so the discussion was, should we take these young men who are very technology savvy? We call them digital natives, you know. They do things very quickly, but then they are not comfortable in suits and tie. They're on their jeans, etc., etc. And so really, but then, so my key message was, you know, if I was a director, if I'm owning shares, what I need is profit at the end of the day. Where this profit is made from my jeans and suit, I don't really mind. And actually, I gave an example of my own son, because sometimes he appears in church with jeans and t-shirt. Now the question, should I send him home because it's not a jeans? But I found that it's a greater sin not to go to church than going to church with t-shirt and jeans. So I think, you know, so from the bankers, they had the perception not only youth as customers, but also youth as employees who can pick this technology very quick, but then they're not comfortable in their suits and tie and everything. I only had it when I married, because my wife said, instead of saying yes, I will say no if you don't come with a suit.
Actually, I have a mother of mine. She was working. She was having a job, a typewriter, but now she's jobless. So can you see how technology can distract? That in the reverse way, it can distract, but then in the other ways, it can add some values. So actually, those innovators, and I had you, sorry, I don't know, Mr. Ivan, you were saying that banks right now, they have this director of innovations, which is good, but at the same time, at the same point of time, you have to innovate. You have to be very innovative, but you have to consider on the technological changes. And the way you are considering technological changes, you have to ensure that you actually somehow preserve those previous jobs, not destroying them. And commenting on what Professor, I don't know, Owen said, that we youth right now, we actually, we are not okay, comfortable wearing like my father here, Mr. Benonduru, having a big coat, a tie. That's very tiresome. But we need to have to be comfortable. You see those code of conduct. I know. Putting a jeans, just a rubber or whatever, looking so smart. I think we have to accept that. We have to accept the changes. I mean, wearing something doesn't mean that you are so good on something. You might wear a suit, but you are not better. Someone might wear jeans, but he's a professor and he's working so good. So I think we have to accept these changes.
I think that maybe Professor can also enlighten us on that issue, because as you can find, most of the industries, they have assets, but how are their risks factored in the risk equation to the extent that industrialization can be supported by the banking sector, given that most of the the industrial assets, they may recoup their returns in the long term, but most of the banks in our economies, they can just extend short-term loans. So, Prof, if you can highlight that, and Professor Ngo is there. Thank you.
Maybe majority of you can never join the army or the police. And the purpose of that uniform is very different. So just so don't judge people by the way they dress. Okay. Anyway, you know, the last 12 months I've really gone deep into this subject area because I co-direct a global commission on technology and inclusive development. I wanted just to point you to a couple of reports that we released in October and actually had global reviews very positively. You go to our website, it's called Pathways for Prosperity Commission. You type that, you'll get the full website, and within there are two reports. One is called Charting Pathways for Inclusive Growth in the Digital Age, which is the first report, and the second one is on digital lives. Digital lives. This discussion about jobs destroyed and jobs created, the evidence we have organized in there is very, very clear that at the margin, jobs are added. It's not the same jobs and not the same job holders, but on net basis, it's always that, including a situation in the US when the first software for accounting, you know, came into being, and it replaced about 40,000 bookkeepers and those type of accounting professionals, and not 40, 400,000, and created 600,000 jobs of other types of accountants that dealt more in terms of interaction with clients and related. So it might be the typewriter specialist, I'll call that, it's not the typist, but typewriter specialist being replaced by somebody, a number of people who are working, you know, on the screen to save maybe much larger groups of people. So, but those two reports, I think we'll get a good sense of what's happening in this particular world. Yeah. Now, let me go straight to the topic here. There are major changes that actually have taken place and are taking place. Sometimes they're happening within our lives because technology changes the way we live and the way we work. And a lot is happening in the banking sector. So let me start from the mundane. You know, there has been enacted a couple of laws that now are very fundamental to, if you want, banking operations and other operations under this new technology sphere. One is called Electronic Evidence Act, where now electronic evidence is admissible in all legal proceedings, including in the court. And that admits a whole range of documentation that previously there is no way they would accept unless you have signed on a piece of paper, but electronic signature now can actually be accepted in the court of law. This law was passed not too long ago, about 3-4 years ago. So it's not like that side has also, there's also another law, which is the National Payments Act, which actually was passed 2 years back, which allows for a whole range of new instruments of financial operations that typically were not admissible before. And it might be important for someone who wants to take a bigger look at what scope on the legal front that has created. You can take a look at that. Apart from those other regulations that are under communications, they have also changed the law there to accommodate mobile telephony and related. Now, let me go straight to banking. There are 4 areas where major changes have taken place, and I wanted to highlight those. The first one is agent banking, which does away with brick and mortar, uses the network of agents, typically almost the same agents that also can serve the mobile money transactions, but probably better endowed with a lot more. But there are investments that they have to make. They're not major. And that has very significantly expanded the scope of banking business without the investment that typically a brick and mortar branch network would require. So this is like creating many more branches than maybe probably a cost of one branch could cover the cost of 1,000 agents. And there are more than 200, 300,000 agents. CRDB has its network. I know NMB has its network, and fairly large across the country and reaching remote areas now through that. And some of them are linked to their branches, etc. So this is one definite area where now you can open an account through the agent, do all your biometrics, and since electronically that is accepted as evidence, that's possible. Okay. Second is what we call as mobile banking. This is banking on the handheld instrument called the mobile phone. If you have a smartphone, mostly, you can do virtually all your transactions without visiting any banking hall. That's why banking halls nowadays are pretty empty. The cashiers in a banking hall, I don't know, maybe they are there mostly for people who make very large deposits and they are collectors of this, etc. But that has changed. If I asked any one of you, when last were you in a banking hall? Virtually none of you now will say, no, I do most of my banking either on the phone or on my laptop, on internet banking, including and mobile money banking also. And the interface between that and ATMs has made it even larger. You can do most of your ATMs now with your mobile money, so that you don't need the cards and related. So it is happening. This is the second area. third area, which is quite important, is credit which is not backed up by collateral, using credit score. And this using big data, and there are models that have been created which gives you a score on the basis of your behavior in terms of financial transactions, mobile telephony transactions. One company which is actually selling those credit scores is called First Access. Have you heard of that company? First Access. Yeah. This is before actually going to the others that combine such scoring with giving credit themselves. Tala operates in the country. It's a global system, by the way, by a very, very young person who sits, by the way, as one of the commissioners on the commission that I'm co-directing. She's the owner, bright. And another one who is running a billion dollar system now. It's called Gojek in Indonesia. Very young also. And one of them dresses in a suit, the other one doesn't. Yeah, so that it doesn't have to be, the suit doesn't tell it all. But it's not just Tala. You know Empower. You know Timiza.
Yes.
You know, these are all loans that you get without collateral on the basis of credit score. And they use big data and actually apply such information on in a model. These guys, First Access sells credit scores. So it's just like a, what do we call it, credit? Yeah, like a credit reference bureau, but it does it mostly for micro borrowers. So SMEs, etc., who don't have collateral. Now you can get a loan without collateral on the basis of your behavior. And that behavior is actually modeled, and they give you a score. If you behave badly in terms of your obligations and expenditures, etc., you'll never get that. Yeah. So I think that has opened up a door, particularly for the small and medium enterprises, including the street caterers, the mamantiriers, who actually get loans from Empower in the morning. They go to ferry, get the fish they want, go to the market, get the vegetables they want, they cook, they sell during the day. In the evening, they are repaying the loan. And in the morning, they take again. So it's virtually a cash flow, a working capital sort of source, which a lot of them would never have dreamt. You can't go to the bank and just get that. Now, Empower is a banking product. Timiza is not a banking product. It's, if you want, a credit-only institution. Empower is backed by CBA, yeah, which takes deposits. So in Empower, you deposit, and you also you can borrow. Yeah, but in Timiza, there is no deposit. Yeah, it's credit only. So I'm just describing this to give you a sense of how much it has changed. And the fourth area was actually to deal with counterparty risk. You know correspondent banking? When you are doing trade with another party who is in another country, right? Typically, the way I usually describe this is when you are doing barter trade, Professor Ngo and myself exchange cassava for bananas. Not cassava, I'll say rice from where I come, and bananas from where he comes. Since we are exchanging there in presence, there is no risk on what you get in exchange. But once you put distance, so that you are here, you are telling someone you will be sending 2 tons of cashew, and he says, I'll pay $1,000, right? You have to trust that if he pays that, you will actually send the cashew. Or if you send the cashew, you have to trust that actually you will receive the payment. Correspondent banks are trust brokers. They guarantee. So they guarantee you, who is exporting, that this one will pay for that. So, for example, they'll issue an LC, yeah, against goods that you'll be receiving later, right? Those now can actually be replaced through a blockchain system, such that you can create a trust system directly without having to go to a third party, because both of you can give that information that cannot be changed and can be verified, verifiable and immutable, and you are part of that chain. So we hope, and there are quite a number of banks here that are suffering from being closed off from correspondent banks. It could be either for sometimes, say, for money laundering or for whatever suspicions. Now, one can actually do that directly without having to go through that. So all these things are here. All these things are here, and it is taking place. In fact, one of the most rapid revolution on the digital stage is happening in East Africa. We are virtually the trailblazers of mobile money. That's where it has started in the world. Everybody else is picking that up now. Right? And therefore, I think banking 4.0 is very much here. It can be much bigger, and in fact, it is also true that on balance, it has created more jobs than it has substituted. So losing the cashiers in the banking hall, when you have 200,000 agents created as part of the network who now can actually, employ and also earn, on net basis, you have added a lot more. And not only that, because you have also expanded the volume of activity. Yeah. So even if labor per unit has been reduced, but you have increased the volume, so the total might still be much bigger than, and in fact it has been shown on data for Kenya that the total is actually more than it has been before. Yeah. So maybe just to give you that sense, but final comment is on the point which Ivan raised. The stance on the regulators in Tanzania has always been give innovation space to lead, you monitor, and then regulate on the basis of the risks that emerge. A lot of countries that have made progress along the lines that I just described are those that have taken this bold approach. But not all countries have. In West Africa, particularly in Nigeria, they've taken the other way. Mobile money is not allowed to be carried by telco companies. So it can only be done by banks as a way of, and as a result, they have been very late in terms of moving. But slowly now, through peer learning and peer pressure, that's also opening up there now. So let me stop there.
At first, he was asking me to open an account, a bank account, which was on promotion. And I told him, I think I don't need a bank account this time because I have my digital wallet. And he was like, what's that digital wallet? How is it? And I was like, I store my money in Bitcoins nowadays because it's a new system, it's a new technology, it's easy. it can just be, I mean, I can just send to you like an email. It's simple, and even if I send to someone money across the country, it's even cheap and fast. And I was like, you know, you young generation, these are just scammers and all that. So actually, I couldn't defend myself much, because the elder generation believes that the youth generation needs shortcut and they don't have knowledge. So I think, I mean, what I'm requesting is, you guys, or as economists, should really give those people knowledge. But I think they're also afraid of maybe of losing jobs and all that. They should really learn how to embrace new technology.
What's called fiat money is money which is only money because of the confidence we have in it. Yes. And the confidence can also be created partly because you have trust in the issuer, and you know the issuer, and the issuer has ways of being able to give you redress if that value is not realized because the issuer is behind it. So the red 10,000 shilling note is fiat money, but the government is behind it, and that's the issuer. Bitcoin has no discernible issuer. And the risks involved around that is that its confidence can be quite tenuous. And that's why sometimes you see its value going up and down like a yo-yo. And you just have to be aware of the risks that you take, and you make a decision. After all, there are those who gamble anyway.
Yes.
Yeah. So it's not like it's totally crazy, but okay. But it's important you know.
Thank you, Professor Nduru, because you gave us the literature, which we'll go back and read. You know, when I was hearing the discussion, I was wondering why they don't talk about youth in the rural area, because we have also, I think, a large percent is living in the rural areas. But Professor Nduru, I think you have touched it, because you have talked about the mobile banking. Now we have agents, so all those ones are youth in the rural areas. So I think it's a high time to know what is going on in the rural area. We know that we have technology, but how are these youth in rural areas embrace technology? Because we want to give them capability so that they can contribute in the development. I think it's high time to see even how banks can tap that opportunities, and then maybe they send those youth who are living in the urban areas to go to rural areas. And by doing that, it seems that they'll be creating jobs, because that is what we want them to see. And we want youth to see that, okay, I have a knowledge, and how can I create my own future? I create my own future by looking on the opportunities which are there. And one of the opportunities, maybe for the time being, we see this mobile banking. They can be like trainers, you know, they can just go there and train these youth fellows in the rural areas. So I think this is a high time. Even banks, you know, the issues of microfinancing. Before, banks were not doing that, but now you see, if you go to Mbeya, you see microfinancing for those farmers who are producing paddy. If you go to Kilombero, you see for those who are producing sugarcane. I think that is how we can see how the youth also are contributing in the development of this country, and that will be inclusive. I think we really need to take that as a note, especially for us who are working in the higher education sectors. These are the issues which we need also to impart to our students. And when we are doing research, I think these are the research areas which we needed to come up with the evidence, and then we come and present. Thank you.
Let me first of all say that I completely share that it's incredibly important not to build up an angst or aversion or whatever it may be vis-a-vis technology. it's incredibly important. And just to give you a very small anecdote, my first job when I came to Swaziland in 1978, what was that? That job was to be helping in terms of getting information about agricultural prices. So the prices of agricultural products, so farmers would have an idea about how much they would get. This information was produced once a month, and we were using stencil machines, and then we were sort of driving them around and getting them out to. So you can imagine what was the kind of lag and the kind of issues and the kind of uncertainties, etc., that were associated with that. Whereas the other sort of comparison to that is a huge truck in one of the provincial capitals in Vietnam, where a man in shorts was sitting with his mobile and figuring out whether he was going to drive the truck that way or that way or that way, depending on what the price was going to be. So I think it's incredibly important at all levels not to, how can you say, it is also, and Benno alluded to that, it is also important to be aware that, of course, when you move into new types of arrangement, there are sometimes risks. I mean, Ponzi schemes done over these medias and so on can be pretty risky business. And some of the major activities associated with the financial crisis we've seen have been associated with that. So it is important to just sort of be aware of that, and that's not being anti-technology, but that's being taking too big risks, because some of them can actually spill over to society. And then society has the responsibility to be thinking about it. Not to be afraid of technology, but to be afraid of the potential risks.
Mobile telephone operators knocked on the door with mobile money. I was the managing director at NBC. I was one of those people who said they're coming to eat our lunch. And I pushed back Vodacom with M-Pesa.
I remember, and I fought you like
yes, yes. You were the governor then, yes. So I didn't know at that point in time, NBC was sitting on some 600,000 customer base, and Vodacom has 12 million subscribers. Put together all these MNOs, they're sitting on some 30 million. The entire banking sector in Tanzania is probably 6 million. So you can imagine pushing back the MNOs, you're simply pushing back 30 million potential clients who could use your system. So that was very myopic thinking, and therefore banking has really changed. Today, the competitor of NBC is not CRDB or NMB. It is its own customers. Because you know what? Technology has created a very demanding customer. I mean, banks that are going to embrace technology with their people, the people who are meeting the customers. I mean, your example there is profound, because if people who are meeting customers on the branches, that's where rubber hits the road. So if somebody can't get it right there, you can imagine how many of you are going to say, stuff DCB, I don't think they know what they're doing. And at the end of the day, it's going to be the end of the bank. So it's unless and until people in the banking hall begin to believe that technology is here to support actually pushing more. When you start seeing people borrowing from Shura or Tala, and the survival of banking is on two. One is on interest income from loans, and the other one is on transactional activities. Payments is a transaction activity. It's gone already. I mean, you just said you do your Tigo Pesa, your M-Pesa. That's revenue for the bank. It's gone. And when you begin to borrow, it's really a big deal. So we have to transform, and therefore digitization is transforming bank, and banking will never be the same again. Thank you.
Thank you. Thank you very much.